Hi, this is Seth David from schoolofbookkeeping.com, bringing to you an overview of course number 3, Understanding Your Financial Statements. The financial statements. Let me see my profit and loss. How much money did I make? These are the questions we most frequently get asked by our clients whom we're preparing the books for. And more as time goes on, especially as I get older and grouchier, I can't help but think more and more often that they're asking the wrong question. There's a much bigger picture to be looked at than just how much money did I make. How about how efficient am I? How much money can I expect to continue to make in the future? And where can I look at indications on the financial statements that will give me those answers, right? So, yeah, I might have made a profit of $100,000 this year. But if along the way I had to take on $500,000 worth of debt in order to produce that profit of $100,000, well, not so efficient anymore. The problem with asking how much money did I make is it leaves out the other question of how much debt do I have? And what do I have in assets? And what's the net equity of my company? And by the way, what about cash flows? How did I do cash flow wise? Are my cash flows coming in from operations, financing, or investing activities? These are the questions that our clients need to be taught to ask us so that we can say, I am so glad you asked, because now I can give you the whole picture, and now you as my client or my boss will start to be able to see the true deep value in terms of what the money you're paying me is bringing back to you as far as the information you can actually get about your company and how it's performing financially in its entire picture. So we're going to start with the two most frequently looked at reports. Of course, the most frequently looked at is the profit and loss. And I'm going to show you that I've got no tricks up my sleeve. There are no transactions on these books. No smoke and mirrors here at schoolofbookkeeping.com. And I just changed the date range to reflect all dates, which means if there was anything at all posted on these books that would affect any income or expense account, you'd be seeing it now. And we're going to do the same thing with the balance sheet. We'll talk about the statement of cash flows a little later. Again, showing it for all dates. Although with the balance sheet, it doesn't really matter because the balance sheet is cumulative. That's the first lesson. The first note you should take if you're taking notes is the profit and loss is like a moving picture. It shows you the financial picture or the picture of what happened financially within a company over a set period of time. The balance sheet, by contrast, is a snapshot. It's a moment in time. What does my company look like? And of course, they look at different things. So we're going to start taking a look at that. But just to illustrate how important it is to understand that the transactions that you're entering affect things in several places, I like to start with a blank canvas like this. And let's start off with, let's say this is a brand new company. And I'm going to start off with my opening deposit. I'm going to open up my bank account called iBank here. And we're going to put in the opening deposit. A lot of people will put it in opening balance equity. The reality is, assuming this was, let's say, a corporation, there should be they have a shareholder distributions. There should be a shareholder contributions in here as well. All right, so we'll quickly set that account up. And I am going to assume that you know a lot of this stuff about setting up the books because our whole bookkeeping fundamentals course covers all that, in terms of creating and adding accounts and things. So if you need to go back and look at that chapter in that course on your chart of accounts, and you'll understand better what I'm doing here. So that course should be really taken as a prerequisite to everything else in the schoolofbookkeeping.com. So we're creating an equity account, and QuickBooks just wants to confirm the information, save and close, and we're going to start the bank off with a healthy $300,000. That way we have some money to work with. Now watch what happens when I hit save and close, and I'm going to talk through it first. When I save this deposit, nothing's going to happen on the profit and loss. No income's been recognized. No expenses have been paid. All I'm doing is coming in as the owner and saying, hey, I'm starting a business. I'm going to make a contribution into that business. So I'm going to add $300,000 to the bank account, and that's going to increase the equity of the company by that same $300,000 because I'm adding value directly into the company by putting money into its bank account. Save and close. Click on the balance sheet to refresh. And of course, it warns me that it needs to be refreshed, so I'm going to say don't ever ask me again, just do it. And there it is there. So we have, like I predicted, see, I can see the future when it comes to QuickBooks. I predicted we would have $300,000 in the bank account, $300,000 in an equity account. The fact that I can do that, though, makes it very easy for me to understand where something is going to go, and based on that, especially when dealing with more complex transactions, how to post them. So it becomes really, really important to understand these relationships that we're going to be talking about here in understanding your financial statements. So, again, just to illustrate the point, when you post a transaction, every time you hit save and close, it's going to be affecting one or both of these financial statements. And then everything that you ever do affects the statement of cash flows. And you'll see why when we get into the statement of cash flows in lesson 5. So let's talk about the profit and loss. The profit and loss is, again, the most commonly looked at financial statement. Now for this, let's open up a sample company file. I've chosen a manufacturing company for a sample file because this is about as complicated as one can get in terms of what the financial statements look like. And I do this, of course, not to overwhelm you, but to show you potentially what it is that you need to understand, whether you're a business owner or a bookkeeper or an accountant or a CPA. Now, it probably follows that you'd expect most CPAs know this stuff pretty well. It's a big part of the CPA exam is knowing how to put together these kinds of financial statements. So this is one area I would certainly expect CPAs to understand very well. But do they take the time to explain it to their clients? Not that their clients need to pass the CPA exam, but they should be given a good working knowledge of what this information tells them about how their company performed, so that they can use the information beyond just having a tax return filed and beyond just being told, okay, let's scroll down to the bottom here and say, oh, you made $94,000. Good year. Good job. We need to go above and beyond that. And that's really one of the impetuses behind me wanting to create schoolofbookkeeping.com, and then my two partners here, Eric and Perry, getting together with me on this, because they saw what I saw, that there's a huge opportunity here to really give people information that they can use to pass along to others, and that's the whole idea. So again, I don't want people just saying, hey, you made $94,000 this year, great year, because then guess what the next question is going to be? Hey, okay, great bookkeeper, or whoever you are, I made $94,000. How come there's only $31,000 in my bank account? Can you explain that? Are you able to explain to them what the difference is between cash and accrual basis and how we can actually reconcile from the $94,000 to the $31,000 that's here on the balance sheet? That's what this course is going to be designed to do. So this was the overview. In the next lessons, we're going to start cutting through the profit and loss. Then we're going to cut through the balance sheet in 3 separate lessons, one on the assets, one on the liabilities, and one on the equity. And then we're going to take a deep look at the statement of cash flow so that we can understand what that looks like. So stay tuned, review this if you need to get sort of prepped. Pay attention, stay tuned, review what you need to, and when you're ready to, move on to the next section.